Good morning and welcome to Equity Story Trade Watch, Wednesday the 12th. I'm here with Claude, the middle of the week, where we normally talk fundamentals. And we've got an interesting day today after yesterday's big day, after Easter break. And there's some stories we're going to talk about. Our thought of the week, a couple of interesting stories. I've got a new one. Claude's got old favorites of his, which we'll talk about. And some interesting news this morning from some companies that I'm very happy about. So let's get on with it. So welcome, Claude. And just a disclaimer quickly with the general advice warning that every stock we talk about is based on fundamentals and technicals only. Claude, welcome. Thank you for joining me. Overnight, we had not a bad day on the Dow. So that's nice. So we've got a bit of a stability in the US forming. And of course, we've got that NASDAQ that's looking quite good. But what to from here, I'm still not 100% sure because there's still a little bit of things happening in the background. But I'm going to move and I'll show you some of these announcements this morning, and I'll show you some reasons why I think some of these stocks we should be looking at and possibly buying. All right, so let's move on to the share that I'm going to put on here, and I'm going to talk about the news first. And I'll start with WHC. Hopefully you can see the announcements there with WHC, and they've come up with an update on the production figures for the March quarterly, which they're going to be releasing probably in a week or two. But this is like a pre-release, and unfortunately, it looks like a downgrade. So previous guidance was 19 to 24. Now it's 18 to 19.2. What is interesting? So we got a downgrade right on the back of tight labor market and some other little things in there. But what's interesting in here is that Whitehaven saying March quarterly production report, the company report an average coal price of $400. That's still very, very high. And considering I'm looking at the actual coal prices, and I'll show you that in a sec, potentially maybe they're talking about maybe Aussie dollars. I have to double check that. But if I change the screen again, I'll show you. So new screen, go to trading on economics. You've got the coal price going from the start of 2023 down to March to 194. That's a huge drop. So I'm just wondering where they're getting the $400 from. I'll need to check it out. Maybe they've got a mixture of a bit of coking coal and some thermal coal. Maybe that adds up to about $400. But I'd say that's probably going to change next quarter if they're going to keep that at $400 for the March quarter. But anyway, that's something to think about if you are trading this story. If you're looking at a potential trade, or you're in this, possibly time to take some profits or get out. But I'm going to have a look at the chart for you right now to see where they're at. So I'll get out of that and go into the charting right there, and you'll see where we're at with Whitehaven. So there's a little bit of maybe in this space, which we talked about before, just to be wary with the coal price dropping like you saw just then. So I'll quickly go back to share screen again in there, and you'll be able to see it closer. We've got weekly, and we want WHC. And let's look at the chart here. So you can see that's today. Here we go. So today it wasn't a great drop below the trend line. It's actually below the trend lines anyway, so should not be in this. But you can see that's dropped, and it's looking pretty sort of dodgy where it might go lower on the back of these news. So that's what I'm saying. You just look at these companies in this space, and you'd probably be wary and moving out. Anyway, that doesn't look great. You should be out. Let's move on to the next company. And this is a really good one. So I'm going to go back here and I'm look at NXT announcement, and that was very, very, very positive for me because we've just picked this up, and it was on Einstein's on the weekends. We've picked up it was on Einstein's. We picked this up as a trade, and how happy are we now today after that announcement, because they've come out and said contract utilization has increased by 35.9 megawatts by 43% since December. That's like 3 months, 43%. Woohoo! That's big news. Claude, you got to like that from a company that's actually, I suppose, maturing, but still delivering quite interesting numbers. Have you looked at this before?
Yeah, absolutely. Look, we talked about it before when you guys were picking up on the fact that the chart was looking good, and I was
Yes.
like, look, I don't get the valuation, but I've definitely learnt to like not bet against this one. Like I've never got the valuation, and that hasn't stopped it going up. So here we are. Like I guess the chart was picking up on the like the news. I'm sure people did know about like that beforehand.
Loosely, that's what happened.
Yeah, so typical, I've seen that kind of stuff happen before. Now we also have a situation where a fair bit of the stock was sold short, so that's no doubt leading to a little bit of spicy short covering into a spike kind of thing. Not ideal for those short sellers, and so as a result, you know, this could like, yeah, it's definitely too late for me to. I'd say you know the best easiest part of the trade now. You know, it's happened today. But there will be short covering, so I wouldn't be in a hurry to close it anyway. Just because this is fundamental good news, so hence why short's more likely to cover there.
Yeah, I think definitely they're scrambling, and when you look at maybe the short to medium term, there's probably no reason for them to be in there anymore. When maybe the tech sector is starting to pick up a bit, you see that news, and they're growing about 40% contract wins. That's actually pretty good. So if I was a short, I'd be getting out of this as quick as I could, pretty much.
The thematic with IT spend and cloud and stuff is still strong, and I'm definitely looking forward to adding into that exposure in my portfolio at the moment as I rebuild my portfolio. Definitely keen to get exposure to that thematic. Maybe not NXT now, but I still think that's a good long-term thematic. That's where I've always liked to play long-term.
Yeah, and look, just from a trading point of view, because I know there's a few traders, and you're absolutely right. The easy trade was there when we picked it up on this candle right. That was 2 weeks ago. So that was a pretty good week last week. It was a precursor that something was up, and obviously there's the announcement right there. Now there's resistance around 12, right? So we had obviously pretty big jump today. You could potentially take a profit around $12 because of the resistance. But if you're a bit more patient, possibly looking for that 6 to 12 month trade, I'd probably be holding this and just reassess my stop and maybe put it under that 1150, maybe around 1140, something like that. So that's what I'd be doing over longer. Short term, possibly looking at taking maybe a profit around 12. But if you're trading on the weeklies, you probably want to wait till the end of the week just to see what happens. But it's look, I'm really happy with this announcement for a stock that I've obviously put in my portfolio only 2 weeks ago. It's extremely good. That's 20% already in a trade, which is for a big stock, that's pretty good. All right, let's move on to the next one. And I want to mention ARX, and we'll look at that announcement in a sec. And I'm not sure if you know anything about this one. But the news wasn't too bad. So some approval from FDA talking about the catheter that they've developed for their burns, which is interesting because they talk about that there's really nothing out there like that, where they drain a liquid from post surgeries and so on. That normally the surgeons do it ad hoc by surgical means, where they put a syringe in and they just drain all the fluids that maybe accumulate. So it's interesting that there is actually something that they've come up with, unless they're just not worrying about all the competitions out there, just talking about themselves. But have you actually looked at ARX before, Claude?
I have, yeah. It's it looks interesting, a little bit. Probably it reminds me a little bit of Nanosonics, but still kind of earlier stage than Nanosonics there. So just waiting and watching really on these guys to see if they can cross over into profitable and cash flow break even. The last quarterly they did break even on an operating cash flow level, so it could be getting pretty close there. So yeah, interesting one. Yeah, I think 40 million NZ cash in the bank. Probably going to be not need to raise capital, but still like 360 million market cap, not yet profitable. So still, yeah, it could be good. I'm not against it at all, and I might look to buy it. It's just always a little bit harder to know, I guess. with this kind of company, what sort of multiple and what kind of the end margins one could expect are, but they can be quite high sometimes, in which case it could end up making sense at the current price.
And look, I'm just looking at the reaction this morning to the announcement. So it had a jump to 110 and it's back to what it started at 106. So I suppose the market got excited at the first one, but then thinking, okay, well, what does it actually mean for the revenues? Because, okay, you got a product, but you need to sell it now. So understandable, right? It's still the actual chart doesn't look too bad. So if you're in this as a, I don't know, a long-term hold, it's technically a hold. If you're in this for a trade, maybe on that candle there, it's still a hold, but that reaction was a little bit muted for me. So maybe there is no trade in that by the looks of things. But anyway, technically it's still a hold either way. All right, let's move on to the next one. And AGH. And the reason I just want to bring this to your attention, I just find it fascinating sometimes when I look through the quarterlies, when I read through the stuff, Claude, and you can see that it's a terrible chart, right? And I know they jumped 17% this week. And I think what have they done today? Let's have a look. Up 22%, right? But oh my God, it's the question for me is what on earth are they doing, right? So if you look at, I'll show you what I mean. So if you look at the quarterly, so that they're saying they got what 9-something million in cash receipts this quarter. So I'll open it up and I'll show you. All right, so they got 9-something million in quarterly, but look at where those money is going. So I understand in product manufacturing operating costs, yeah, good, 5.4, but then you got staff costs 3.4 million, so that's 11 million in 9 months. I mean, that's just ridiculous. And then you've got 5 million administrative cost. Where's the money going to, Claude? I just don't get some of these companies. There's just so much wastage. I reckon you can, if I reckon they could probably be profitable on this, to be honest. If they start looking at the bottom line, see what all costs are going, they can probably turn this operation to be profitable and probably have a much better share price than they are.
4 million, what is it? 4-point-something million in just admin and corporate costs, for almost 5 million in 9 months of corporate costs. That's pretty. I know.
That's just crazy. What they have got golden toilets that they have to look after. I just don't understand how much money they can spend on corporate costs and administration costs. It's ridiculous. Anyway, like I said, if they can cut down some of these staff costs, and they're probably going to turn into cash flow positive at the very first thing, and then possibly get profitable, right? And get another 3 months out of it. I mean, crazy. Anyway, just my little pet peeve about some of these companies that should be really doing much better than they are on the bottom line. All right, now last one I want to quickly mention is WGX. So let's have a look at that one. Just like another gold player. By the way, gold back into the $2,000. So that's holding on quite well. But let's have a look at WGX and its production update. And look, it's a little gold play. When I say little, they're looking at about 260,000 ounces for the year, FY23, which is not too bad. It's actually one of the larger Australian players. And now if NCM, Newcrest, gets taken out by Newmont, then we are scrambling. Who's the next biggest one? Probably NST and then Evolution, right? In that sort of order, which is, we're going to lose quite a substantial player in the gold space, really. So I find it fascinating. The only thing I don't have here is the costs they're going to come up with. So you're going to probably have to look at that. But it looks all right without knowing what the costs are. So I want to watch again for what's going to happen. So I'll quickly show you that. There we go. 188,000 ounces for year to date. All right, Claude, let's move on. I think I've spent enough time talking about announcements. NXT was obviously very, very good. ARX, good, interesting. WHC, probably get out. Well, you should be getting out for sure. Yeah, so that's the summary of that. But I'm going to let you talk first about your thought of the week and the story that you've chosen to talk about. And drummer, go for it.
All right. So building off the NXT thematic, obviously, if there's going to be AI and more computing and stuff like that, well, you need somewhere to host all that data, but you also need people to continue to sell and install the software and implement all of that kind of stuff. So that could be DTL can have a big part in that. Managed service provider and sort of IT distributor. And yeah, look, essentially they had very strong first half results. There's no, I own shares. I sold because I just wanted to refresh my portfolio. But, this is one of the ones I miss the most. It's not super cheap. It's coming off the back of strong results. So it doesn't feel like the no-brainer it was when I first looked at it when it was $1.60 or whatever. But it is a good business, and it's a good, like my father-in-law has owned it the whole time. It's been a good one for him. But
I think you should just follow his advice, just hold it.
Yeah, I mean, he not all of his ones have been crackers, but it's good that he's held some big crackers. This is one. Like just a few like this DDR, PME, that kind of stuff long term. Even if you don't trade at all, you can still make good money. And that's kind of the way that I aim for it. Obviously, I mix in a bit of, in my life, in my career, I've done some trading. I'm not really doing trading at the moment. I'm refocusing on this long-term thing. So I want to fill my portfolio with a variety of ideas, some that have like, exponential or like huge potentially disruptive potential. Some of the little ones, yep, some of them will bust out, be absolute lemons for sure. But also if one of them, if only like they're the shots that I do want to keep taking endlessly, because you get one of those right and that's when it's like a 10x or whatever. And honestly, when I first looked at this, $1.60 back in the 2013 or whatever, like their profit had actually gone down. Like times didn't always look so great for these guys. There is an IT cycle there, but these guys have become very large. They're a huge player now in Australia. The government probably wouldn't run without them. So I think that there's, in this sort of low margin distribution kind of stuff, there's definitely a scale advantage. There's definitely a nobody gets fired for choosing data 3 advantage. And for that reason, I like see it as like a good bet on Aussie IT spend overall. If it's just a macro view, like we're going to keep spending more and more and more on IT, then these guys are well placed to pick up some of that as profit. So that's my idea of the day. I like it myself. Wanted to see what you thought of the chart.
Yeah, look, I'm just looking at the chart right now, and actually I'm starting to get more interested in this because it's coming back to the trends, Claude. So 735 at the moment is down about 3.3% for the week. I'd love to obviously pick it up on the trend on the red line, which is about 710, 711, even better at 675. But I'm already getting quite interested in this.
So when I last bought it was when it dropped, like it broke the trend down to like 450 or whatever. And I just wish I'd bought more then. But I did buy it, but that rarely happened. Like that, you rarely see it sell off like that lately anyway. And look, I don't know if it can continue such strong results, but having said that, I do have enough belief in the quality of the business. Like it did lose its CFO recently, but that he served for like 30 years. So I think that he built it, to be a good thing. And I suspect, a lot of, effort's gone into building a good business over the last 10 years. And I don't see that falling off unless IT spend massively falls off. And I don't really see that happening right now. It could happen for sure if there's anything can happen. But I just long-term, this is one of the ones I like. I thought that I'd bring it to you because I think the chart looks, obviously I don't know anything about charting, but obviously it's going up and to the right. So
that's all you need to know, Claude. That's exactly what you need to know. Is it going up? Yes. Going well. But that's the simplicity of what we look at charting wise. Is it going up? And it is. And like I said, then you look at the nuances of it. When should you be buying this? You want to, normally I prefer it as a investor buying it closer to the trend lines if I'm looking a longer term. And it's getting back there, right? And it will do that consistently. You can see the chart, it's going up, but it is coming back to the trend lines every now and so often, right? So be patient. I think this is it. This is the opportunity. Maybe in the next 2 or 3 weeks, it might retest at $7, 711. That's where you've got your first parcel, maybe, if you're looking for a long-term investment. So I like the story, absolutely like you. I think this is a very quality business in Australia, and you can see over a long period of time. So I'm looking at 10 years, it's delivered exceptional results, right? So if you take that longer term view, you're probably going to be well rewarded as long as, of course, they can deliver the performance that they have been over the last few years.
Thanks for that, Peter.
That was a good one. That was a good one. All right, I'm going to talk about a new one that I probably haven't talked about, that someone has mentioned, I think, on ATA. So yeah, it's probably stolen from someone, but I don't care because now it's mine. But it's NXD, and I've got it here. So this is, I think you said that it used to be called what, iCollege, I think, right?
Yeah.
The chart here is absolutely beautiful, right? So again, a swinging chart going up. This is what we want to be looking at. That sort of stories are going up. And what I like from it, so first of all, obviously, post-pandemic, borders opening up, immigration's increasing in Australia. All the students are coming back to Australia. That's the sort of stuff we should be looking, well, it's probably going to benefit and probably be looking at because of the chart, right? And of course, not everything is created equal, especially in probably a sector like education, where there's been a few blow-ups and a few great stories. So we've got to be careful of what we choose to play with. But what I like, so I'll be looking at this presentation for NXD, trying to get a handle on NXD business, what they do, where they're positioned, how expensive they are, and all those little things. So I probably like a lot of what they've got here. So I think they're trading at the moment around 30 times, but so it's not cheap from current, well, we take a snapshot in its current life, but it's the maybe 6 to 12 months forward that where I think that PE will drop significantly. So the market capitalization right up 200 million. They've made a big acquisition in Red Hill Education in October 2021. That's where that iCollege, Red Hill came up together and obviously started called NextEd. But the interesting bit is for me, and I always, Claude, the problem for me was back when I was looking at education for the last probably 10, 15 years, was the fact is if they are reliant on government funding, I find it extremely dangerous, right, for me. And I remember, I don't know if you remember a company that went bust because there was a funding scandal in one of these companies.
Yeah, there were a couple like that, absolutely, and I think that's led people to be a bit cautious of the sector, which is probably why there was probably a bit of an opportunity in this. Like even as it renamed, I even wrote about it. Like as it was renaming from iCollege to NextEd, I felt like it's going to go on a bit more of a it's sort of rejigging itself. The students are coming back. It's going to have a bit of a run, and they're going to go out and tell the story there under their new name, and that has kind of happened. So it's really hard for me to understand like how much of this is just the we've reached that amnesia point, desire to jump on the good momentum, the good story is now overcoming that like caution from the times when in this educational segment, in this vocational educational segment, private providers have got in trouble before because they're offering like absolute crap, or the courses weren't up to scratch, or they lose their accreditation, or this, that, and the other.
Exactly.
And so not saying that that's happening here. And honestly, like, there can be big runs for these kind of businesses because the actual, if it all works, the actual economics of providing education, it works, it can work really well. Like often they don't need that much CapEx. They need a teacher, they need a room. They need like course materials and that's pretty much it. And then, they can charge quite a lot of money because then they're then going to give those people the right to get a job, and those people are it's an ROI for them as well. Works pretty well in an environment where employment is pretty it's easy to get employment. And
we've got to remember that Australia as a destination is very, very attractive to overseas students, tourists, whatever, right? So this is also for me a big point in case of having those services provided, because that we always, I suppose most of the time we struggle with trying to get quality employees in Australia. So we outsource a lot of that stuff. We're trying to bring in workers from overseas and so on. So I find that, and if you look at the actual revenue by source, and this is where the curricular areas they've got is IT is pretty important, healthcare huge, hospitality also huge. There's struggles here in Australia, so I think those two are probably going to be quite good for them this time around. Management's pretty good as well. And of course, English language, to international, this is a big one for them. So I like this.
So the English language thing is very much about immigration. Now, obviously, everybody, the government controls immigration. Obviously, we had a big pause on immigration essentially during COVID when we just weren't letting people in. And the question, I'm an immigration bull. So that's a theme that I like for this company. And that's why I originally started looking at it a half a year ago now. And I stupidly didn't buy shares then. And now I'm just wondering, have I missed it kind of thing. And you can see that rebound there in that slide right there in terms of the numbers. And you never know though, because it's a political thing. There's totally valid reasons why some people would want to restrict immigration because, essentially you bring in a lot of people and then you basically you need to build the infrastructure you need to build more train stations, more hospitals, more schools, more, houses, more apartments. You need to grow. If you're going to bring in more people. And the problem is, of course, is sometimes the government is letting in a certain amount of people, but not building out the infrastructure to make a good life for everyone. As a result, the standard of living of the people in the country go down. Now, I think that we do see that, and we have seen that, and we're going to continue to see a lower standard of living over time, because as a country, we have to understand we do not elevate talent in engineering, science, technology the way we should. We're just dig it up and sell it. And we're actually quite good at mining because of that, because they do elevate people that are good at, dig it up and sell it. And that's pretty much our thing. And so that's a bit of a problem. And that means that they're going to keep on bringing in more people so that they can also have this second prong of it, which is more houses, property prices goes up, everybody's happy who owns a house already, basically. And the people that don't are
Yeah, look, the theme is pretty strong for me too. So I'm and just looking at that, this is what I'm thinking is, are we too late for this or are we too early for this? I think we're just right. This is the time to get into this story. And the reason why is there's been a turnaround. You can see December 2021, March 2022. So last year starting to improve. That's the key for me here. Net profit after tax. They finally turned profitable again, right? And if you look at the outlook, they're talking about material increase in profit in the second half. So I think there's a time to get in right now, Claude, where they could have a good, maybe next 12 months odd with what they've been saying, what they can see in the structural changes and the tailwinds behind what they're doing. So you can see this one here. So revenue and profit expected to materially increase in second half FY23 and FY24. So even talking about FY24 ahead as well, that's the time to get in.
But they're off a super low base, so that's the thing, right? It needs to materially increase.
And look, if they both play out well, I think there's money to be made here. That's pretty much what I'm looking at. Is there money to be made here? And I think there is, because I don't think we're at the end of the recovery.
What's the latest data on the ongoing immigration kind of policy? Surely the government actually, they say one thing and then way more people come in. There's not actually a set number, is it? It's these are the rules. So if so many people want to come, then they come.
That's right.
Is that the way it works?
They feel like it.
Yeah, I think it's it appeals to me as well because it's just, I don't know. I feel like the one thing I would be worried about for people writing this stock just would be in case there starts to be a thing that's anti-immigration. Otherwise, I see it going strong.
I don't think. I think we're crying out for more workers. Certain areas. I think we can't.
But don't forget, that some people, and I'm not saying against this if they do, but they're we want less immigration so that so that we give higher wages to workers and et cetera, et cetera.
But but for me, unless we've got high unemployment rates, then you can probably make an argument. But we don't. We've got such bloody low rates here.
I'm with you on it. So we can't kill the idea. That's a good sign.
Absolutely. So I think there's room for this to be quite strong at the moment, right? That's just the way I see it. Anyway, so that's my idea. And I think, like I said, this is a time to get into this story. Is it time to get in 160 versus 140? Of course, I'd love to pick it up at 140. But generally speaking, if you take that 6 to 12 month view, it still probably be okay, right? Anyway, we'll talk about it. Well, let's look at it at the end of the week, see where it's at, and we'll make a decision. But I like the story, what I've been reading, how I see it, how the immigration's working and how the students are coming in. This could be a good tailwinds behind it for the next 6 to 12 months. So that's an idea for me. Claude, thank you very much for your idea. I think we did a pretty good job today with coming up with some pretty interesting stuff. If I'm going to pat myself on the back, especially Go NXT. Thanks so much for joining me. Have a great rest of the day.
Yeah, I think that we've got, there's still some stocks that have good like tailwinds and good charts. So that's good. That's what you want when we're combining fundamentals with the equity story ethos. Exactly.
We want to find a cheap, great looking chart, cheap and good growth.
Yeah, it's sometimes hard to find cheap, but you can get growth in a good chart. That's pretty decent. Yeah,
absolutely. I agree. All right. Thank you very much for that, Claude. Have a great day. Thanks, guys, for joining us. See you again tomorrow.
Thanks, Peter. Thanks for watching, everyone.
Cheers, bye.